The price of crude oil has rallied over 35% last week, and this is projected to add around 1.4% to US inflation, even if crude oil doesn't go any higher. And it does look like there's plenty of room still left in this crude oil rally to the upside. So if we add another 1.4, 1.5% to US CPI, we are going to start to push above 4% in the US. And there's only one place the US dollar goes when we start to go over 4% in US CPI, and that is to the upside. And alongside the US dollar, the Canadian dollar is also set to benefit the most from this spike in the crude oil price. So going into next week, US dollar longs and Canadian dollar longs are two of my top themes. For those of you new to the video, my name is John Fortune. I've been trading financial markets for over 18 years. And if you want the exact setups we're going to be looking at in today's video and that we use in real time with members, you can download the free strategy guide in the pinned comment and in the description below. And in there, you will find all the setups that we'll be looking at today. And these are the setups that have generated our members over 400% returns. So a quick breakdown of what we're looking at in today's video. We're going to start with the DXY, followed by the US dollar pairs. And I'm going to show you which US dollar pairs I think are setting up with the best setups next week. We're then going to look at Bitcoin and Ethereum before moving on to the quantitative analytics to find the high probability setups in non-US dollar pairs. Now, going into next week, the top non-US dollar themes are the Canadian dollar to the long side and also the Swiss franc to the long side. So franc long was the theme where we generated most of our returns with members last week. But also to the short side, the euro is looking like a really good policy going into next week, so euro shorts. And after we've looked at the non-US dollar pairs, we're going to finish with commodities, gold, silver, and crude oil, which is really the big driver of global markets right now and the big story in global markets. And as always, all of this is time-stamped in the pinned comment and in the description below for you. And for those of you who enjoy these videos and you feel like the channel provides you with some value, be sure to like, share, and especially to subscribe. It really helps the channel when you do that. And I want to say a big thank you to all of you, as always, who have subscribed to the channel so far. So if we jump over to the multi-charts, just have a look at the DXY. The DXY is still overall neutral. It's in this range in the weekly time horizon or in the monthly time horizon. And of course, we're sitting at this range we've discussed in previous videos, right at the major channel low going all the way back to 2011. So my view is based on this catalyst that we have, with crude oil, I do think we're going to see a push up at least, over $100 a barrel. And we could even get back up to, maybe 110 in the DXY as crude oil starts to go over $100 a barrel. So I do think we're looking at a significant bottom here. A break above the 100,257 is a monthly double bottom, so big reversal pattern. But going into next week specifically, you can see we did have this breakout. This was the breakout level I put on here last week for you guys. You can see we gapped up, we pushed into it, and as soon as we started to break, that's where we started to rally. And you can see if you trailed that with the 10 EMA, which I was looking at last week, you had a really nice move to the upside. We started to lose momentum here, and then we went into a sideways consolidation. So coming into this week, I do anticipate, even though overall the dollar is actually still kind of bearish and neutral, I do anticipate this being the start of a bigger push up to the 100,257 over maybe next week, or at least in the coming weeks. And of course, the issue with that is once we break the 100.257, that is the double bottom monthly breakout confirmation level. So for now, I'm looking for the DXY to come up to the 100.257. I do think now we've kind of loosened and we're starting to consolidate. I do think we could pull back and we could actually retest somewhere down here, the overside of this pattern, or maybe just the daily 10 EMA. So what I'm looking for here then is, by pointing this out, is if we get a sell-off or we get a weakening of the dollar, I will be using that to look to buy the dip. So I'm not saying that the DXY, kind of unlike last week where we had the catalyst and it broke out straight away. I'm not saying it has to immediately break out to the upside, but if we get weakness, then I'm going to be looking to buy the dip with DXY long opportunities. So that's what I see in the DXY, most likely a pullback into this area before a break through the trend line and the rally up to the 100.257. So if we pull up euro dollar in hedge dash, you can see the sell zone next week starts at the 1.17381, and that's where euro dollar turns overbought during the week. And you can see here we have really an A-star setup. This is a fantastic setup for shorts going into next week. Why? For those of you who have downloaded the free strategy guide, you will know we've got 3 points of confluence here. So we basically have this breakdown with momentum where we had that catalyst last week. Any kind of pullback into this area is going to be a stair step to retest the prior low, which we broke through. It's also going to be a pullback into the moving average, and we have this descending trend line, which sits as the third point of confluence right here. So this is an amazing setup if we can get euro dollar pushing into this area next week. This is exactly where I'm going to be looking for a short opportunity for a 1 or 2 day reversal. This is the kind of area where if you do time it well, you could probably hold onto that, for longer than 1 week down to the lows and for the next leg down. But my mandate and my process really is for shorter term trading, capturing 1 or 2 days. So again, for those of you who have downloaded the strategy guide and been through it, you will know this is a rip and flip setup where we kind of capitalize on those pullbacks in trending markets. In this case, it's starting to trend to the downside. And if I just quickly pull euro dollar up on the multi charts, you can see what I'm talking about here. This was the breakout level from last week, which I highlighted for you guys. It was the 1.17419. And now last week's breakout level sits right at the sell zone of the 1.17381. We had this failed attempt to break out of this counter trend move last week. You can see euro dollar came down. We made a higher low right here in the 4 hours. We attempted to break through the trend line and we held. So what I suspect is going to happen is that this is going to pull back into this area, and this is the area I'm going to be looking for that short opportunity in euro dollar next week. You can see kind of mirroring, but the opposite of what we looked at in the DXY. Euro dollar is almost certainly coming down, in my opinion, to the 1.14689. Probably even next week. I mean, if we pull the way back here, it'll probably take 2 weeks, but that is the next point of call for the DXY, and the profit taking zone in hedge dash next week sits at the 1.14964, which is right at the significant breakout level, or the monthly, in this case, double top as opposed to double bottom, which is what we're looking at in DXY. And that is the confirmation point at the 1.14689. So euro dollar, really fantastic looking chart, whichever way you look at it, heading into next week. Next is pound dollar. Now, I'm really only looking to sell any push higher in pound dollar. And what I like about pound dollar next week is we have a really nice key area of resistance right at the start of the sell zone next week. So in order to get into the sell zone, we'd have to break above the moving average and push like this. And what would that be? That would be a range play. We would start to, once we cross the moving average, we start to go into a kind of ranging mode. And so this would be a range reversal setup from the key area of resistance right here, sitting in the sell zone, which starts at the 1.35650. So that's what I'm going to be looking at specifically in real time with members throughout next week. And if I pull up the multi-charts very quickly, you can see we have a very similar kind of double top setup forming over here as we are seeing in euro dollar. Now, last week we broke through the 1.34333. This was the breakout level I highlighted for you. And look at it. If you trailed it in the 10 EMA in the 4 hours, you would have been out down here somewhere as a breakout because you did have the catalyst. And in the daily chart, we're still below the 10 EMA. So something very quickly to pay attention to, we do have US CPI on Wednesday, and US CPI can be a significant catalyst to push the dollar one way or the other. And so just coming back to pound dollar, and the same thing applies to euro dollar. If we get these markets pretty much doing nothing, because you have a catalyst, you really only want to look at breakout trades if you have a catalyst. So because you have a catalyst coming up on Thursday, in the scenario that this does nothing, and primarily what I'd like to see it do is push all the way through, retest this area so I could short it over here. But in the scenario it does nothing, and we stay below the 1.34333, if you then get a bullish catalyst for the dollar, you can look for this breakout of the counter trend move and a continuation of the trend to the downside. So in that scenario from Wednesday onwards, again, any strong DXY bullish catalyst, which would be inflation coming out hotter than expected, look for the breakout, and the next port of call, the bottom of this range in the weekly time horizon here is the 1.3139. So I do think that's where we're coming down to. Might take a couple of weeks or a few weeks to get there, but that is the direction of travel now in pound dollar. Shorts only for me in pound dollar next week. Next is US dollar Swiss franc. Now last week, US dollar Swiss franc broke above the moving average. It tested the underside over here, and it actually pushed into its second weekly upper bound, and that was where the short opportunity came in US dollar franc last week. Now, buying Swiss francs was the top theme, or one of the top themes I was looking at last week. It was the theme that paid the most last week with members. And I didn't short US dollar franc because this same move was playing out in the other franc pairs as well. And because we had a strong US dollar, why would I short the US dollar when instead of shorting the US dollar, I could short the euro versus the franc, which is what we did. And I could short the pound versus the franc, which we did. And the reason for that is because EU currencies, especially the EU majors, the euro and the pound, they tend to suffer the most in inflationary conditions. Why? Because the US dollar goes up because of higher interest rates in the US. And the commodity currencies also tend to hold up in inflationary regimes because commodity prices go up. So it tends to be the EU majors that suffer, and that's why last week you could have made money short in US dollar Swiss franc, but I preferred personally to short the euro and the pound versus Swiss franc. So going into next week, the same thing really applies, because if we get another push up into this area, we could very easily have another short opportunity at the highs in US dollar Swiss franc. Why? Because look at the moving average. We're in a range. This market is ranging. So any push into the high, we can look at this as a range reversal play to the downside. So I am interested in this. However, if this pushes into its sell zone next week, just like it did last week, actually pushed all the way through the sell zone to the top of it, then we're also likely to see euro franc and pound franc push into their upper bounds. And so again, you know, will I short US dollar franc next week? Maybe, but I'd prefer to short euro franc and pound franc again, given the opportunity if we see this kind of push up in the franc pairs. So just bear that in mind if you're trading the Swiss franc pairs next week. And just a quick look on the multi-charts, you can see here, this was the underside of this big descending triangle. This was the major breakout level I highlighted for you at the 0.78785. We tested the underside. Now we're breaking down. And we're most likely going to make our way down towards the sell zone. The bottom of the weekly lower bound, the 0.76742, which also sits right at the ascending trend line. So because we're in a range in the daily time horizon, there is a potential to also buy the dip and range play this from here. So again, it's not being predictive. If US dollar Swiss franc pushes into the high, we could look for a potential range play back down for 1 or 2 days. And if US dollar Swiss franc pushes into the ascending channel low and the buy zone, which starts at the 0.76742, we could also look for a 1 or 2 day range play to the upside. So there are options in US dollar Swiss franc. The only thing I will say is because we've retested the underside of this pattern, there is more risk in buying this down here than probably selling it up here, because at some point this pattern could break, and it will likely break. And, you know, is that going to be next week? Potentially, but given the chance, I'd rather be shorting from up here in this range than buying from down here. But if it does hit this level, there's a good chance it bounces for 1 or 2 days, even if it does start to break down. Next is US dollar CAD. Now, US dollar CAD isn't a fantastic market, but on balance, I would still prefer shorts. Quantitatively, we are still looking to the short side in the dollar versus the CAD. And we had a really, really strong sell-off on Friday, but we're inside this consolidation. Now, there is over here a really nice 4-hour trend line, which we could use right at the sell zone, which is the 1.36653. We'll look at this on the multi-charts in a second. But any kind of push into this area, I would be looking for a 1 or 2 day reversal back down, and possibly even back down to the kind of pattern low over here. And if we jump over to the multi-charts and we take these 4-hour highs, you can see there is a really nice touch of the trend line right here. So if this pulls back, this is the area. And again, it's an if-then process. I'm not being predictive. If the market pulls back into this area, I'm going to be looking for a potential short for 1 or 2 days. Now, the other thing to notice here is, which is very interesting, is we have this almost kind of head and shoulders pattern in the monthly. And the 1.35396 is essentially the monthly head and shoulders breakout level. Now, look at this last week. We have an engulfing weekly candle. It really does mean that, you know, if we push into this area, you know, we could hold the pattern low, but there's a huge risk. If we don't hold this pattern low, then we could see a substantial sell-off, because not only are we going to have follow through from a weekly engulfing candle, but if the 1.3539 doesn't hold, it's actually a very significant technical breakdown in the monthly time horizon. You can see a lot of volatility from that. So I only want to be heading into next week short US dollar CAD if the opportunity arises. I do not want to buy US dollar CAD because we could see a significant liquidation below the monthly breakout level of the 1.3539. Next is US dollar yen. US dollar yen is a pretty straightforward one. I am looking for a potential long opportunity at the 155.35, which is right here. If it happens straight away, it would actually be a dip and a flip setup. But if it kind of meanders sideways for a bit and maybe goes down on US CPI, then it could turn into a range reversal play. Either way, this is where I'm going to be looking for a potential long opportunity. Don't forget, in inflationary regimes, the Japanese yen also tends to suffer because money flows into the US dollar, and when money's going into the US dollar, it comes out of the yen and vice versa. So I do have a bias where I want to be looking for long opportunities in US dollar yen. The only thing I don't like about US dollar yen to the long side, it's a risk on play. And if we see equities starting to sell off significantly, then we could see this also sell off. So it's not a fantastic opportunity. Euro dollar is a much better short than US dollar yen is a long, for example. But it is something I'll keep my eye on. And as long as we're not seeing significant liquidations in stocks, I would be interested in a 1 or 2 day bounce from the 155 next week in US dollar yen. Next is New Zealand dollar. Now, New Zealand dollar is a nice setup heading into next week. You can see we did have some strength and now we're starting to roll over. And this is a market where we have a really nice type 1. So type 1 being a resistance area or a support area, in this case a resistance area, which pushed price lower in the past. So it's in the same direction we'd be looking at in the future. Those are the strongest key areas of resistance. And this is specifically what I'm going to be looking at next week, personally speaking, in New Zealand dollar. So if we can get a snapback, maybe it comes on US CPI, but a snapback above the moving average, it would turn into a range reversal play. I am going to be looking for a 1 or 2 day move back down towards the moving average from the 0.60130. Now I want to pull up the multi-charts as well, just to show you something, because we do have CPI on Wednesday. You can see the breakout level I highlighted here was 0.59380. So I am looking for that pullback. And if it does pull back and it snaps back like that, it's going to invalidate a lot of these patterns. So there is, of course, the chance that nothing happens into Wednesday, because when you have CPI, or a big news event, very often the market can do nothing going into it. And then you get a bullish CPI reading for the dollar, which is hotter than expected. That is when you could look at that breakout trade from the counter trend line move, because what we've done is we've broken out of this pattern. The technical target of this pattern is the 0.57802. So we take the mouth of the pattern here and we project that down by 1. So I do think we're coming down to the 0.57802. Whether we pull back and we get an opportunity to sell the rip, as we just looked at over here in Hedge Dash, or if nothing happens and you get that breakout on CPI, either way, those are the two things I'd be focused on next week. And of course, again, having broken out of the 0.59380 and retested it, this is where you can start to see the next leg down after a breakout. It breaks, retests, holds, and then you get the next leg down. So that's what I'm looking for in New Zealand dollar next week. I can really only take short opportunities in New Zealand dollar next week. And the final dollar pair before we move on to Bitcoin, Ethereum is Aussie dollar. Now, Aussie dollar is a straight up range play because the moving average is now crisscrossing in the middle. And as you can see, the sell zone sits at the 0.71378, and we have a really nice key area of resistance here. And the buy zone sits at the 0.692215, and we have a really nice key area of support here. So this market sort of has problems both ways, in the sense that if we push into the high, it is actually one of the strongest pairs. And as you can see, even with the dollar rallying, it hasn't really gone anywhere against the Australian dollar. It sold off, but it actually recovered it, and it hasn't really gone anywhere. It's kind of holding flat. So what this tells you is both the Australian dollar and the US dollar are strong. So why is the Australian dollar strong? Well, because of the gold price and because of the iron ore price. And when you see inflation and commodities going higher, this brings with it demand for commodity currencies. So the Aussie is actually a currency I like to the long side, outside of the US dollar and also the Canadian dollar. The Aussie dollar is the third currency to the long side I'd prefer to be looking at. And when you have two strong currencies, what tends to happen? The market does this, it ranges. Just as if you have two weak currencies, it does this. And if you have a strong currency and a weak currency, and if you have a weak currency and a strong currency, it does this, right? So I would anticipate this as a range play. I would be interested in either of these setups. So again, not being predictive here. If we push into the top of the range, I will consider a potential short. If we push into the bottom of the range, I will consider a potential long. The only caveat is I would just be a little bit careful if you are range trading this. And, you know, if you're buying the dip down here, for example, just make sure that equities aren't really starting to fall out of bed or anything like that, because that's when you could see risk off coming in and you could see a bigger move down. So not the best market for trading next week. I think there are better dollar pairs that we've been through, but just keep your eye on this. Keep it, you know, on the watch list for a potential range play. If not too much is going on and equities are holding steady, you could pretty much short this at resistance or buy this at support heading into next week. Okay, so moving on to Bitcoin, Ethereum, and we're looking on the multi-charts because, of course, breakout strategies are going to be better for cryptocurrencies because of their volatility. Now, last week, I highlighted this kind of pennant pattern, and you can see it kind of started to move towards the end of the pattern, and when you get that, these patterns don't tend to work as well. So we started to, and you see patterns, they morph into other patterns. We started to morph, and now we've actually gone into an ABC correction. So you could, for all intents and purposes, actually take this off now, but I wanted to leave it on there because we looked at it last week. So now we've got this scenario where we've got this kind of up channel come in and we've got this key area of resistance at 72,214. So I anticipate this being the C wave. If you look at this on the weekly time horizon, this is a really, really, really nice bearish wick. So I mean, if you're looking for shorts, it's nice. If you're, you know, long, I don't know why you'd be long here, but if you were looking for longs, obviously that's not great. So the breakout level here, simply I would just take the candle low of last week or this week, because, you know, crypto is still actually open. So the 65,294.99 below there is where I would be looking for shorts. I wouldn't look for long opportunities here. I think there's a very good chance we're coming back down to the prior low and also onto this monthly support area. Why? Because the target for this pattern up here is sitting right at the 47,741. So based on that, I do think we're coming lower, and what I would like to see is anywhere between the 72,214 and the 65,294. We're kind of in no man's land. We can kind of chop around and bounce around. We're just ranging. But once we break out of the 65,294, assuming that this week closes without breaching this, because of course, you know, if we push past here, there's going to be a new weekly low. But assuming the week closes like this, and this is the weekly candle low, I would be looking for a break through the 65,294 and a break through this kind of ABC channel low. And this is the area down here below the 65,294 where I'd be looking for further declines to the downside. First of all, down to the 59,977. And once we breach this low, that would open up the 47,741. But, you know, to be on the safe side, instead of going for the target of this pattern, I would go for the monthly support, because we could bounce at that and not actually achieve the target. So the 49,111 is opened up below the 59,977. Those are the two targets I'd be looking at to the downside. Bitcoin, cannot buy Bitcoin at the moment under any circumstances, shorts only for me. Next is Ethereum. Now, pretty much the same as Bitcoin. You can see we had this kind of pennant forming, and then we broke out of it and we retested the high, or the start or the mouth of this pennant. And it basically just, you know, gets rid of that. And this overall turns into an ABC type correction now. So we have this kind of pennant pattern, and then it morphs into an ABC. And this is where you can start the next leg down. So again, very similar to Bitcoin, you can see we do have this kind of pin candle. And when you get this kind of weakness, if we're to close somewhere down here, you can often see significant liquidations in the following weeks. So I would take the candle low, the 1920. What I really like about Ethereum is all the way back here, I highlighted first of all on the kind of overshoot to the upside and then breaking down through this pattern. The target of this pattern here is the 1581.62, and we spent the whole time actually making our way down to this. And this target also sits right at this key area of support in the monthly over here, which we tested here. So I've been saying to you guys for, you know, a couple of months now, I do think we're coming down to the 1500, which up here, you know, that was actually a 50% reduction we're talking about in the price of Ethereum. but you can see this is now playing out. We're actually very close to achieving it. So I'd only be looking for shorts in Ethereum. The breakout level for me would be the weekly low next week. And again, you know, just to be on the safe side, you could look for the breakdown below the weekly low. Let's assume the week closes with the 1920 as the low. You know, I'd look for a breakthrough there and the kind of counter trend line over here. And this is where I would begin to look. Now you've cleared out the low of last week and you've also cleared out this trend line. That's where I'd be looking over here for that final move down into the 158, 1.62 and the 1530 area in Ethereum. Just like Bitcoin, I can only be short or do nothing. Cannot buy Ethereum at these levels. Okay, so quick look at the portfolio selection. So going into next week, the Aussie and the Canadian dollar are at the top because these are commodity currencies. They're actually supported by rising commodity prices. Australian dollar, of course, is supported by iron ore prices, primarily, you could say, but also gold significantly. And the Canadian dollar is supported by the price of crude oil. So I would be looking to the long side with those, but also the Swiss franc is setting up nicely. Now, it's an EU major and they do kind of tend to underperform, but because of that safe haven quality, it is also starting to outperform some of the other currencies. So I do like those three to the upside. To the downside, the US dollar is only just starting to turn. I do actually anticipate this starting to flip, I would imagine probably early next week. And so I'm kind of just trying to get ahead of that curve by looking at something like euro dollar to the downside. But there's also other currencies you could look at, like Aussie dollar to the upside, US dollar CAD to the downside, for example, which all involve US dollar shorts. So on balance, you know, the US dollar we've talked about, you know, kind of the opportunities I'd like to buy or even short that if it's against the US dollar CAD, for example. But the other currencies which I do really like to the short side next week are the pound and the euro. These two currencies tend to suffer the most in inflationary regimes because money flows into the dollar and money flows into the commodity currencies. So where's it going to come from? It tends to come from the pound and the euro. So outside of the dollar pairs, I am mostly interested next week. I do think the better setups are in the euro to the short side and the pound to the short side. And what we're going to be looking at now is we're going to be looking at specifically EurCad to the downside, pound CAD to the downside because of that crude oil spike. And we're also going to look at Euro franc to the downside, pound franc to the downside. You could look at Aussie yen to the upside, CAD yen to the upside, franc yen to the upside. The only thing is, if equities do start to sell off or they continue to sell off, you could see a bit of a safe haven bid come into the yen. So this is why I prefer Euro pound versus the Swiss franc next week, but also the CAD because of the spike in the oil price. Okay, so kicking off the non-US dollar pairs with EurCad. For those of you who have downloaded the strategy guide, you will know this is actually a counter trend setup. So we are oversold on a rolling daily basis, and we did not pause or reverse higher last week when we traded into the sell zone. And from memory, we actually traded into the third lower bound in this market. Not a huge surprise because we have a significant catalyst. So when you have a big catalyst, you can very easily push to the second or even third upper bounds, which we don't even display on here. But if you have a big catalyst like the crude oil price, you can get third upper bounds or lower bounds tested as well in 1 week. So this is an extended reversal play, which is counter trend. It is also a Monday, Tuesday reversal play because markets that don't tend to reverse during the week after taking out these levels tend to push up the following week on Monday or Tuesday. Again, all of that is in the strategy guide. But the one thing I will say is you don't have to take counter trend trades. You know, counter trend trades are riskier by their nature, and there's nothing wrong with just sidestepping them, especially if you have a significant catalyst. You know, counter trend trades are even better when you have a big move in a currency, but there's no real underlying catalyst to explain it. And you just think, you know, this move doesn't really make sense. This move makes a ton of sense because money's coming out of the euro because it's flowing into the dollar. So people are converting euros, you know, they're increasing the supply of euros by selling their euros and buying dollars. And at the same time, the Canadian dollar is going up because of the price of crude oil. So this is getting hammered to the downside. So there is a potential Monday, Tuesday reversal play. However, if you want to be on the safe side, you could focus on moves into the sell zone, which is the 1.59091. There's no key area of resistance we can use here. So what I tend to like to do is drop down to the 4-hour chart and use the 4-hour time horizon for an entry. So in this case, we have a really nice high here at the 1.59284. I wouldn't short this down here. We may get a pop down on Monday, but there is a big risk that this pulls back, especially moving into the sell zone next week because we're already overextended to the downside. It's possible this could get more extended, but the risk is we can only deal in probabilities, and the probability is that this is now an area where it needs to pause higher for a day or two. So I'd like to see this pull back, and what I'm going to look for is an attempted breakout of the 1.59284. So think about this. Despite everything that's happening, next week, if we push into this area, there are going to be some traders who are probably stuck on lower time frames. Maybe they're not paying attention to the news. There will be people who are buying this. And there is a decent chance that this breakout fails, and the reversal and the liquidation when they pull their positions back down below here can be very strong. So that's the setup I'm going to be looking at next week in real time with members. Next is Euro Franc. This is also an extended reversal play because you can look at counter trend moves when you have extreme sentiment. But again, counter trend moves are not my favorite opportunities, and I really like to see them at key areas of support, in this case, if I'm going to do that. So I'd be focused on this pulling back, and I'm going to look for a pullback into the moving average. You can see this is setting up for a rip higher and a flip lower for 1 or 2 days. Exactly what happened last week. This pushed up into the moving average, and this is where we shorted it in real time with members last week for the move down. You can see multiple days down. You could have had this as a swing trade down to the lows. We exited it after a really solid move down here in this area. But I am looking for that same setup again. So that's what I'm going to be looking for. The 0.90988 is the key area of resistance. And if I drop down to the 4-hour chart, you can see that this is a really nice type 1 resistance, push price lower in the past, which I would be using to look for that same kind of rip and then flip lower in the daily time frame. That's set up for 1 or 2 days next week. Next is GbpCad. Now GbpCad is a short or do nothing for me. I cannot buy this market next week. We have a really nice potential setup right here. We've got a prior low, which becomes a stair step. So it comes down like this. You break it, you pull back, you test it, and you start to come down. And at the same time, we have the sell zone, which starts at the 1.83667. So we turn overbought above that level, which in and of itself creates high probabilities of this being pushed down or at least moving sideways. And you might say, moving sideways, how does that help if you're short? Well, it doesn't really help, if you're short and it moves sideways. But what it means is if the trade doesn't really work, you can pretty much scratch it for break even. That's what it tends to mean. So if it moves down and reverses, you get paid. If it moves sideways, doesn't really work, you can pull it off for minimal loss. So I do really like this setup going into next week. It is a rip and a potential flip lower for 1 or 2 days. And just like Euro Franc last week, if you do get an opportunity to time this from this area, there's a decent chance, depends what your strategy is, but if you are swing trading, down to the prior lows, there's a decent chance that works out. Any kind of breakdown intra-week, this is a nice profit taking target, the 1.7984 in the buy zone. But I cannot buy it, only if I'm short and this push down could I buy it, because I'd be buying back what I've sold. In other words, you're just booking profits. So this is what I'll be looking for in real time with members next week. Next is pound franc. Now, this was a market we shorted successfully last week, but it kind of struggled a bit. It pushed into the sell zone, and last week you can see it moved into the moving average. This was a rip and flip setup. And we did come down for a couple of days, but we didn't quite sell off, especially down to the lows like we did in Euro Franc. So we shorted Euro Franc last week and we shorted pound franc. Euro Franc actually worked better. So what I'm looking for now is if we get continued strength, this actually breaks that downtrend and it goes into a range. So it's not yet an uptrend. This is now something we should expect to range unless or until a pattern forms and it breaks out. So what I like about this is we have a really nice low over here, which we've already tested once, broke through, pulled back and retested on the underside. So the 1.0517 is a really well-defined, in this case, key area of resistance or broken support turning resistance. So I am going to be looking for a push up into this area. The sell zone starts just above it at the 1.0521 roughly. And this is where I'm going to be looking for a range play back down towards the moving average next week. If we can get this in pound franc, then I'm going to be looking for that setup. And the final two CAD and franc pairs we'll look at are New Zealand CAD and New Zealand franc. Now, although commodity currencies tend to outperform in inflationary regimes, the New Zealand dollar doesn't tend to benefit as much because the type of commodities that New Zealand produces are not the same as, Australia and Canada, for example. So you don't tend to see the same benefits for the New Zealand dollar as you do the other commodity currencies, but it does, on balance, have benefit as well. But certainly versus the Canadian dollar and potentially even the Swiss franc and the Aussie, I would anticipate further declines in the New Zealand dollar. So any pullback into this area next week, what I like about this is we have a really nice pivot point at this high. We broke through and then we failed, and look at how we came back and retested it on a kind of minor basis. And I've said to you guys before, very often when you break through, you get a minor pullback, a big move, a bigger pullback, so a kind of major pullback, and then you get the move. So what I like about this is we have this really well-defined key area of resistance, which has already been tested. So we know it has value. And if we're oversold on a rolling daily basis, again, we could pop lower, but it suggests we need to pause and correct first. So I'm going to be looking for this to pull back. I'd be viewing this almost as a mispricing. I'd be saying we shouldn't really be seeing strength in this. So any test of the 0.8100 in the sell zone, which starts at the 0.8088, this is where I'm going to be looking for a short. This would be a rip and flip setup. I'm going to be looking for 1 or 2 days down in New Zealand CAD. I cannot buy this market next week under any circumstances. And the final Forex pair before we move on to commodities is New Zealand franc. Now, we had a really nice pullback into the sell zone last week, and we had this sell-off. So I didn't personally short this. I shorted pound franc and euro franc instead, pretty much the same trade. But you can see very, very straightforward in New Zealand franc. If we get another retest this week of this level, the 0.4615 where we sold off, or 46415, sorry, where we sold off last week, then I'm simply going to be looking again, and this would probably turn into a more of a range play this time, as opposed to a pullback into the moving average, but I'll be looking for that same sell-off for 1 or 2 days. So that's what I'm looking for in New Zealand franc. This is the only opportunity I'm looking for. If it doesn't pull back into the sell zone, then there's a very good chance I will not trade this market at all next week. Okay, so moving on to the commodities, starting with crude oil before we look at gold and silver. You can see the 67.36 was the breakout level that I highlighted to you guys, and we gapped through it over the weekend. We pulled back and we started to settle at the 10 EMA in the 4 hours, and then we started to really just accelerate to the upside. Now, if you got involved somewhere down here on the breakout with the catalyst, you can see and trailed in the 10 EMA on the daily, you'd still be in this. If you trailed it in the 20 EMA in the 4 hours, you'd still be in this. If you trailed it or you took some off the table, on a close below the 10 EMA in the 4 hours, you would have taken a little bit off there. Maybe you'd still be in it with a partial position. Either way, the breakout trade is well underway. This is not the area to start to jump in with longs, okay? I know it's tempting, especially if you miss something like this to try and you just want to get involved, but it's past, it's gone. The opportunity was down here. This is where you wanted to be involved for the move. Anywhere up here, you run the risk of being the wrong side of bigger reversal. We're coming very, very close to the 95.50, which is this key area of resistance. So I would suggest that for anybody who's not already involved on the breakout down in this area, potentially trailing a position, then the next safest place to get involved, because if we look at this on the monthly, once we get above the 95.50, there's really nothing but air up until the next key area of resistance, type 1 resistance of the 124.12. And I think that's probably where we're going to get to. So what I'd be looking at, especially as we're extending into this, I do think we could test this and then pull back and consolidate underneath it, or wait until, if you want to be safe at this point, we breach the 95.50 and then consolidate above this level. Then and maybe it actually catches up and even closes below the 20 period moving average in the 4 hours. Then you've got a consolidation and you're getting ready for the next leg up. So that was the breakout trade from last week above the 67.36. If you're not already involved, don't chase it. Okay, so wrapping up the video with gold and silver. Now, both gold and silver have a headwind with a stronger dollar, and so they're not as good to the long side as they were. And in fact, I would prefer to trade silver to the short side, as we'll see heading into next week, given the opportunity. In gold, I previously highlighted this kind of pennant. We came up, took out the target and sold off. We have a new pennant forming down here, and the target is up at the 5,415. So in gold, if we break out of this, the moving average here follows. You can look for that bull flag breakout and a move back up to the prior high and the 541598. That is the only thing I'm looking for next week in gold. We have a really nice wick down here on the weekly candle, so I do think there's a good chance we get further upside next week in gold. And finally, we have silver. Now, if we get the upside breakout in gold and silver, I would prefer to trade gold. And you can see, you know, any kind of breakout above here. You could look at the 9219 as the next port of call. Again, if the moving average follows it, you get that bull flag. But if they both break out to the upside, I would prefer to trade gold to the upside. However, if they break to the downside, you can see this counter trend line here. At the moment, we're just inside the consolidation. Then I would prefer to short silver instead of gold. And I would be looking for a run down to the 71.34, which is a really nice key area of support over here, which held. Plus, this would be a move down to the moving average, the 20-period moving average at the 70.90. So that's the opportunity I would look for in silver if both gold and silver sell off. And if they both break to the upside, I'd prefer to be long gold rather than silver. So that is it from me for today, guys. As always, I hope you enjoyed today's video, and if you did, why not consider joining us in the GMT training room each day, where I look at the best markets as well as sharing real-time setups that I'm personally looking at trading with members as part of our GMT training program. Don't forget, you can also get a 2-week free trial to the cutting-edge hedge-trading app used in today's video by heading over to www.hedge-.com. Access to the cutting-edge hedge-platform is included with every GMT membership.